So look, if you're not using these 4 core pillars in your trading, it could be the reason why you aren't consistently making money in the markets. You see, all profitable traders have one thing in common, which is that they all incorporate these 4 things into their system on a day-to-day basis. Now, for the first 2 years that I was trading, I used to spend hours on the chart getting frustrated and even losing money despite all the work that I was putting in. But as soon as I started to implement these 4 things, my results skyrocketed and I finally started to see some consistent results in my trading. So in this video, I'm going to be revealing exactly what these 4 things are, as well as some free resources you guys can use in order to get started implementing them right now in order to make more money in your trading. So let's get right into the video. Okay, everybody, so the 4 pillars, 4 things every profitable trader uses. And the last one, if you guys can stick around until the end of this video, is a game changer and is something that has drastically improved my trading results, but it's also something I rarely see any other trader in the space talk about, right? So make sure to stick around for that. It's incredibly important. And I'm also going to be giving you guys a ton of free resources as well towards the end of the video that is going to massively help you out, including my full trading plan completely for free as well. So jumping right into things, the first pillar is, and I know what you guys are thinking, this is a bit simplistic, but hold on and hang with me for a second because there are a few nuanced details to this. So the first pillar is actually your trading strategy. Now, everybody talks about a trading strategy. Everybody says, have a rule set, have a trading strategy and all of these things, but nobody actually tells you exactly how to do this, right? So first things first, to make consistent money in trading, having a strategy is an absolutely essential part of trading. You need a strategy. And not only that, but you also need a written set of rules that you have written down and back tested and collected data on for yourself. So this point is key, right? Because anybody can go on YouTube, they can learn a strategy from any one of the gurus online, but until you have actually back tested it for yourself, you're not gonna see any consistent results with it, right? So I can tell you right now exactly what the rules that I use in my strategy are and how this has basically led to the results that I have. But if you haven't backtested it for yourself, you're not going to have trained your eye and your brain to recognize the setup in the live market and be able to execute on it. Because when you backtest your strategy, right, you're not only collecting data on it, but you're also practicing and training your eye to see the setup play out over and over again. It's kind of like going to the gym, right? I can tell you how to do this exercise or that exercise, but until you actually do it for yourself, you're not going to see any form of results. So the key here is not just having a strategy, it's having a back-tested strategy that you've collected data on, and this is absolutely essential. I would also highly recommend having written down rules either in front of you on your trading desk or wherever you trade from, or at least having it in note form on your computer or phone so that you have something to refer to, a template that you can follow every time you come to the charts, right? So for example, with me, I have my trading plan right here in Google Docs. I also used to have it written down in front of me on my charts, but now because I have used it for so many years, I basically have just committed it to memory, so I don't really need it written in front of me. But essentially, this is what I have included in my trading plan. So the first element is obviously going to be the technical aspect of it. And by the way, guys, this resource is going to be available completely for free in the description below. So if you want to check this out and download the trading plan for yourself to see the exact rule sets that I use in the live market, then check that out for free in the description below. But just a brief rundown of this strategy, because that's not the point of the video. What I'm basically doing here, so firstly in the training plan itself, how I've actually laid this out, because this is very important, I've included the technical strategy first of all. So this is where I have my technical rule set, so including identifying higher time frame market structure and direction, going down to the intraday and lower time frames to identify refined structure and any points of interest that I'm interested in buying or selling from. And then number 3, I've outlined a set criteria that I need to see once price comes into my point of interest, where I'm looking to basically confirm that price wants to head in my intended direction. And to do this, I'm essentially looking at lower time frame structure. As before, the point of this video is not to go through in detail this actual strategy, but if you guys want to read through this in your own time, it will be for free in the description below. But the point of this video is just so you guys can see how I've laid out the trading plan in this sort of simple and step-by-step process, where I know every time I come to the chart, I'm looking for this, then this, and then if this happens, I'm going to execute a trade or not execute a trade, depending on whether the criteria is met, right? So that's really key. Having this sort of clarity in terms of what you're actually looking for is, from experience, the only way to make consistent money in trading, because without this, you're not going to know when to enter, when to exit, and all of these sorts of things. That also brings us on to the next step as well, which is in this step 4, right? I've outlined exactly where I'm going to be targeting. In this case, I'm using a mechanical risk to reward system, so that every single trade, there's no ambiguity, there's no uncertainty. I know exactly where my stop loss is going to be. I know exactly where my take profit is going to be. And once again, this is backed up by years of back-tested and live-tested data. So I know that over a sample of trades, this does actually work, and I have a statistical edge in the market. And that point is key. Having a statistical edge is obviously essential to making long-term profits in trading. Now, that's essentially what the first pillar is: strategy, having a back-tested and data on your actual system, and then having this also written in notes form so that you can refer back to it as a template every time you come over to the charts, right? Now, step 2, again, something that's very frequently talked about in the trading space, but very seldom is it actually explained in full detail, and nobody really tells you exactly what this means, right? So the next one is risk management. So risk management, very simple, but everybody talks about it. They don't actually go through what it actually means, right? You need written down concrete rules to follow. Otherwise, you're not going to be able to stick to it, and you're just going to simply be making up rules as you go along. So how many times do you hear people say, for example, that they just simply don't know how to manage risk properly? Now, the way to manage risk properly is to just pick a percentage of your account and risk that on every single trade. This is also a key point, right? So risk management, the whole topic of risk management, it should not change depending on how you feel about a trade. So let's say, for example, as a rough guideline, I risk 1% of my account per trade. If I don't feel that a trade looks good, or I feel that it's probably not going to play out, I'll still risk the same amount. If I'm on a 5-trade losing streak, I'll still risk the same amount. If I'm on a 10-trade win streak, I don't double down on my risk. I risk the same amount every single trade. And the reason why I do this is because, again, I have that back-tested data on my system such that I know if I'm risking this set percentage and I go on my max loss streak, which historically has been 6 trades in a row, I know that I'm comfortable losing 6% of my account, and this is not going to cause me to go on tilt or affect how I execute my trades. I'm still comfortable losing that 6%, and I know that going forward, I will still be able to accurately enter trades according to my rule set without this really affecting my mindset whatsoever, right? So the key with risk management is really pick a percentage of your account to risk per trade, ideally around 0.5 to 1%, but again, this is going to entirely depend on your specific data. So what I would do first of all, before deciding on your risk, is go through your data and identify what your maximum loss streak is, because once you know what your maximum loss streak is, then you can work it out so that you know, or so you can work it out so that you know, based on what your max loss streak is, what you are comfortable losing. So if your max loss streak is, for example, 10 trades in a row, but you're risking 3% of your account, are you really going to be comfortable being in 30% drawdown on the account? Probably not. So if you do have a max loss streak of 10, I would recommend, for example, risking 0.5 to 1%, so that way the maximum you're going to lose of your account is 10%. So yeah, that's essentially how I would go about risk management. And yeah, as I've said here, 1% is a good amount, 0.5% if you don't want to risk 1%, but For a lot of you guys, I know a lot of you are probably only trading prop firms. So for the challenges, I would recommend doing 1%. Otherwise, it's going to take you forever to pass. And then once you hit the live stage, I would then drop that to 0.5%, because as soon as the sort of monetary aspect and the potential of making real money comes into play, people go on tilt, they start making stupid decisions. So 0.5% in order to have longevity is a good start. Now, again, moving on to the third pillar, psychology. Another cliche and buzzword in the trading industry, but I honestly believe that in the majority of cases, the Forex industry and the trading industry has actually lied to most people about how psychology plays an important role in trading. So people think, right, or I hear this all the time, as somebody with quite a decent Instagram following, I get the question all the time, how can I deal with my psychology? You know, my psychology is the reason why I'm losing money and all of these sorts of things. But I think honestly that even though most people blame their psychology, 9 times out of 10, this is simply not the case. And let me explain exactly what I mean by this. So most people's problem is that they don't have a lack of consistency and they don't not make money because of their psychology, but rather it is a lack of a clear and back-tested strategy with a written down trading plan. So when people approach me and they say, oh, I can't control my psychology, my emotions are causing me to lose money in trading, oftentimes this is very not the case, because I then go back and ask this person, have you got a back-tested strategy and a written trading plan? And they'll either say something like, what is back-testing? What's a trading plan? Or all of these sorts of things. So very, very likely in these sorts of circumstances, it's not your psychology. Psychology, in my opinion, only plays a very minor role. And the key, right, is having that back-tested strategy. So let me just explain this in more detail for you guys before you click off the video. So let's just imagine this scenario, right? What would happen if you had this concrete trading plan with back-tested data? So let's discuss some of the psychological problems that most people think they have in trading and why this is probably not the case. So first of all, you wouldn't over trading. This is the main problem that people say they have, right? But if you had a written trading plan that says you're only allowed to lose one trade in a specific day, and then if you do lose a trade in a specific day, then you're not going to trade anymore. Well, if you had this rule and you knew that it worked because you have back-tested data, then obviously that's going to completely remove the problem of overtrading. The problem with overtrading, and the problem that most people have, is not overtrading itself, it's not knowing what they should be doing. So just imagine this, for example, if you don't have a back-tested strategy, right, and you don't have a written rule for how many is the maximum number of trades you can take in a specific day, then even if you took 10 trades, you may still think it's acceptable to take another trade because you just simply don't know and don't have a specific rule on when you're going to cut the losses and stop trading for the day, right? So the first step here, to stop over trading, just have a simple written rule in your trading plan. Again, this should probably be calculated based on your maximum loss streak and how much you're risking per account. For example, if you're trading prop firms and the max loss that you can have in a specific day is 5% and you're risking 1% per trade, then it's very easy not to blow the account, because once you lose 4 trades in that day, just simply stop trading and then you're not going to ever violate that max daily loss rule, right? So that's the first problem. Second problem that people have is they say, I can't enter and execute trades perfectly because I'm scared of losing the trade. Now, if according to your data, you know exactly where to target, where to make break even, and that your trading system has an edge, so meaning that, for example, over a sample of 10 trades, it is statistically likely that you are going to make money, then there would be zero reason to fear losing trades, because you understand that losing trades is just a part of the process and that losses just are a part of trading. If you know that your win rate is 40%, you know that in 10 trades, it's expected that you're going to lose 4 trades, right? And these 4 trades could come back to back. So you could lose 4 trades in a row. Now, if you knew that this was the case and you had a 40% win rate, then you would no longer be scared of losing, because it just doesn't make any sense. How can you be scared of losing when you know that even if you do take a few losses, overall you are going to be profitable, right? So most people say that their psychology gets in the way, they're afraid of losing, but rarely is this actually the case. The case is instead that they don't have enough data on their strategy to tell them what is basically their win rate and what is the likelihood that they're going to make money, or even whether their strategy has an edge to begin with, right? The next problem that I hear a lot of people say is that they are greedy and they hold trades for too long. But again, this just comes down to having a simple set in stone rule that you can follow. So for example, in my case, I use a set 1 to 3 mechanical TP rule. This means that I cannot possibly, even if I am greedy and want more money on a specific trade, it means that I can't even possibly let that greed take over, because I have this set in stone rule, right? So every single trade, I'm just going to get out at 1 to 3, despite how I feel about the trade. Even if I think it's going to run for more than a 1 to 3, I'm just going to simply get out. And again, this is based on my backtested data, because I know that if I exit at 1 to 3 on every single trade, I'm going to make money overall, and I have a specific win rate to accompany that system. So for most people, it's not the fact that they're greedy, it's the fact that they don't have a set in stone rule in their trading plan. So just to summarize all of this, the problem for most people is not the psychology, and in my opinion, psychology only plays a very minor aspect. The main problem is not having an edge. So an edge meaning, over a sample of trades, is it statistically likely that you are going to make money? And again, this comes from backtesting it for yourself, not just copying somebody else's strategy, and also having a written set of rules to follow, including the points that we just went over. So how many trades are the maximum losses you can take in a day? Where will you exit? Where will you enter? And all of these sorts of things. How much will you risk per trade? And all of these set in stone rules, which are very important and entirely depend on your personal backtested data and personality as well. So again, just to summarize, the problem probably isn't psychology, it's not having an edge and a written set of rules. Now, moving over to the final pillar and the final thing that I rarely hear talked about in the trading industry, but is one of the most important things, and one of the things that has, like I said at the start of the video, massively improved my trading, is something called ASR. So first of all, what is ASR? ASR is simply this advanced self-review process, which is this idea of going back through your trades and performance and doing regular performance reviews. So something I like to live by, and something that I think is massively important in trading, is the idea that if you don't know which problems you have and where you're commonly making mistakes over and over again, how can you hope to improve? If you don't know what's wrong, you can't possibly improve it. So ASR is basically this process of identifying these problems and then hence working on the problems in order to improve your trading. So just to give you an idea of what I actually do, and once again, I'm giving away this entire template completely for free in the description below if you guys want to check that out. So essentially what I'm doing here, I've got my trading journal, right? And I've divided this into an ASR section and also just a regular trade journal. Down here is where I journal all of the trades that I actually do take and any of the trades that I miss as well. But the point is relevant for this video, and the point that's relevant for this fourth pillar is this ASR, right? So if you guys look in, for example, so I've divided it up into the month and then the weeks in the month. And every single week and at the end of every single month, what I will do is I'll click on one of these templates, right? And I'll journal for that specific week how many wins, losses, and break-evens I took, the number of trades I took, and any of the missed trades. So in this week, I didn't take any trades, but for example, if you go over to the missed trades section, I journal the trade, the date, profit and loss, And then this part here, this is crucial, right? So I'll journal down the technical reason why I actually took the trade. And then also I've got a section here for psychology, which is basically where I will say, in this case, why I missed that particular trade. But if I did actually take a trade and this was my actual trades taken, this would just be how I managed my emotions during, before and after the trade. But with missed trades, obviously you can't journal the emotions you had because you didn't actually take the trade. So instead, I record the reasons why I missed the trade. And this is one of the most important aspects, I think, about how you can go about improving your trading, because if you record the reasons why you're missing some of these winning trades, then going forward you can basically create a strategy and plan going forward as to how you can avoid missing these trades and make more profit in trading, right? So that's essentially the ASR process that I am using. As I said, that template will be completely for free in the description below if you want to check that out. And I have also included the full trading plan that I use in the description below as well. But one thing before I end the video is to remember that even though you have this trading plan and you have this Notion journal at your disposal, now that I've given it to you, the strategy probably won't work for you unless you actually go back through and back test it for yourself. So I can tell you the exact rule set that I use. So all of the rules in this trading plan I've basically gone through, but they're not going to work for you unless you actually go through the charts and practice seeing it play out over and over again. And that is the only way over the 5 years that I've been trading that I have found to enable somebody to consistently make money in trading, right? So that's really it for this video, guys. I hope I provided some value for you in this video. If I did, make sure to like and subscribe for more content like this and some more backtesting videos on the strategy that I use as well. Now, if you want to see how I personally backtest this strategy, I've done numerous videos like this in the past on my channel, over around 30 hours worth of backtesting sessions. So if you want to see how I backtest the strategy and how the strategy actually works in the market, check out this video next, and I will see you guys in the next video.